Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news bond markets are coming around to believing the US Fed signals, reversing their view that their call for higher rates was just talk. But first, US jobless claims stayed up at 250,000 last week and about the level expected. There are now 1.67 million people still on these benefits, unchanged as well, and also staying up. Although both are now higher than year-ago levels, they remain historically low and don't alter the underlying tightness of their labour market. But you do get the sense that the next movement will be an unwinding of their benign labour market conditions. The Chicago Fed's National Activity Index turned marginally negative in May after a positive showing in April. And the Kansas City Fed's Regional Factory Survey turned more negative as well in June, as did the Conference Board's Index of Leading Indicators. Both were as expected though. Meanwhile, American existing home sales edged marginally higher and by more than expected in May, an improvement on the April retreat. And China's on vacation for the Dragon Boat Festival this week, a 3-day break. They're expecting more than 100 million tourist trips this year, which is actually higher than pre-pandemic levels. Although still deeply negative and below its long-term average, EU consumer sentiment rose in June to keep the improvement that started in November going. And overnight, both Norway and England raised rates by more than expected. In Norway's case, they rose 50 basis points to 3.75%. In the UK case, they also rose 50 basis points to 5%. In both cases, markets had expected a 25 basis points rise. Norway has inflation running at 6.7%, and the UK has it running at 8.7%. So both central bank policymakers clearly realise they aren't leaning against these price pressures hard enough. The cost of shipping containers continues to fall, down 3.5% again last week. It is saying something about the state of global trade, and it is not positive. The bulk cargo shipping costs, however, are rising again at about the long-run average level. The US Treasury 10-year yield will start today rising to 3.79% and up 7 basis points. And the price of gold will start today down another $19 at $1,916 an ounce, and hasn't been this low since early March. And oil prices are down too, down a sharp $3.50 at $69 a barrel in the US, while international Brent price is just on $74 a barrel. And the Kiwi dollar starts today at 61.8 US cents, down a quarter cents from yesterday. Against the Aussie, we're marginally firm at 91.5 cents. Against the euro, we're little changed at 56.4 euro cents. That means our trade weight index is now at 69.8 and also little changed. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.